Market set to rally on the last day of February. Here's what you need to know before the bell. In this past weekend's newsletter, we stated that we expected a rally this week after last week's sell-off got the markets to pretty oversold levels here short term. Markets did try to rally a bit yesterday, opened up, did sell off during the day, but we did finish higher and staying above that 50-day moving average. So this morning, futures are again pointing higher as we get ready to wrap up the last day of February. Of course, the first day of March, we'll see some portfolio managers window dressing portfolios for the month. And we're getting ready to wrap up the quarter, which as we start to approach the end of March will lead to more window dressing so that portfolio managers have all the right stocks in their portfolio. So again, with markets temporarily oversold here on a very short-term basis, this kind of attempt at a rally here is not surprising at all. And again, the risk here is that we can get a rally up to about 4,000-ish, maybe 4050 on the S&P. That's about where the 20-day moving average is. So there isn't a lot of upside here as long as we maintain this sell signal that we have in place now. Now, we're about a third to a halfway through that MACD sell signal. And again, our money flow indicator is a little bit ahead of that signal. So again, there's a bit more of consolidation and work in terms of weaker pricing in the markets over the next few days. The month of March tends to be positive, but it is one of the weaker months of the seasonally strong period. So again, this all kind of lays into this fact that we've got the sell signal in place, markets are oversold, we can get a little bit of a rally, but likely at some point we're just going to kind of trade sideways here for a bit while we work our way through that sell signal. Now, if we can do that, the bull market remains intact, the one that started back here in October. Unfortunately, where we exist right now, we are only about 1 to 2% away from breaking very critical support in the markets, which would lead to a retest of these October lows. So the question is this a bull market or are we in a bull trap? And the question really resides around a very small margin of error to the downside of about 1 to 2%. So a break of those levels will confirm that this rally was indeed a bull trap, lured all the bulls back into the markets. Now, if that is the case, we need to become more defensive. So use this rally, any rally that we get over the next few days, continue to raise some cash, reduce your risk in your portfolios, rebalance risk accordingly, just in case we do get that break to the downside, because you want to be protected from that. If not, and the markets do consolidate here and we get a buy signal, we can put capital back to work. That's really easy to do. I'm your host, Lance Roberts, and that's what you need to know before the bell.